Hi, Cecil Robles here with YourForexMentor.com, and welcome to another free market tips video. We are going to be talking today about the Euro-Dollar 4-hour chart, and there's a couple interesting lessons here that I'd like you to learn, and some valuable trading techniques that can really help you become a more successful trader. So the first thing that we want to do is we want to look at this euro dollar. Today is July 17th, and it's a Sunday, so the market's just getting ready to open, and I'd just like you to see exactly where we are in the whole scheme of the euro dollar right now, and what could potentially take place. So first thing that we're going to want to look at here is a technique that I call a pullback technique, and this technique is obviously very good for trading with the trend. And essentially how it works is it's fairly simple, but what you're looking for, I've got on my chart a couple of indicators. I've got the 50 exponential moving average right here, which is this orange line on the chart. It's a 50 exponential moving average. You can see there that I've got it 50 there, exponential, so we want to keep that. And then it's applied to the typical price, the high-low close divided by 3. And I've got a dark orange on my chart, but you can put it whatever you want on your chart. I've got some basic candlesticks on the chart, painted green and red. And then I've got the CCI indicator with an input of 20 here, a period of 20. And this is applied to the typical price as well. And the levels on there are negative 100 and 100. And you can see here that the CCI is basically an unbounded oscillator, which means that it basically can go up as high or as low as the market movement allows it at that particular moment. So it's unbounded. And essentially what we're looking for here with this oscillator is we're looking for pullbacks below the negative 100 and pullbacks above the 100. So if we're in a uptrending market, we're essentially looking for pullbacks back below the negative 100 level. When we get that, we can start to look for a buy opportunity. Now, this doesn't happen all of the time, but when it does, it's a very, very high probability indicator, and it's also a very, very profitable indicator because we're going to be risking very, very little generally in our trades. So essentially what we're looking to do is basically buy when this setup occurs, and it actually occurred right here. You'll notice the market moved up, the trend line or the 50 exponential moving average began to turn up, and when it did, we had a pullback here. Now, if we pull a fib, now you always want to pull fibs from left to right, and you always want to go from the swing low to the highest swing high at that point in the market. So if we didn't see all this other stuff, that would be where our swing point is. Then you can actually pull a number of fibs. You can pull from this swing low up to that high point. You can pull from the next swing low, which is right here. Oops, wrong one. Let me just delete that. You can pull from this next swing low up to the high point, and you can get a number of fib levels in there. And you can see here that we have a number of fib levels. We have basically the 382 fib levels, the 382 from this level and this level, and we also have the 786 fib level. You'll notice I have basically the 382, the 618, the 786 on my chart. Then I have the 127.2 and 161.8 fib retracement levels as well. And you can see here that at this point where we had that dip below this CCI below negative 100, two times here. We had the first dip right here on this candle, then we had the next dip here on this candle. You can see both times ran into support there at those fib levels, and this is what we call a confluence of fib levels because we've got the 382s, the 382 fib levels there, and we've got the 786 at the same spot. And so you can see that it's coming into some major resistance there, and at the same point we can take this trade with the trend. So how do we set it up? Well, once price goes below that negative 100, what we're looking for is for a breakout to the upside above the closest swing high or sub-swing high. And a swing high is essentially defined like this, as a high point in a number of candles. Generally, you're looking for a high point within at least 3 to 5 candles. So in this case, we have a high point right here. At this low here, we'd be looking for a break above either this level or this level. And on this candle, when it went down like that, we would be looking for a break above this level right here. This is a swing high area. So once price breaks above that level, we would be buying, and we would go ahead and place our stop next or below the lowest, below the low of this candle right here. Or you could find the closest swing low, which would be back here, and you could place your stop back there. In this case, you're looking at about 106 pips stop loss. Now this is on the Euro-Dollar 4-hour chart, and you can see exactly what happens. And then what you can do is you can trail your stop using a inside candle, 3 inside candles trailing stop. And the way that that works is essentially, for instance, you have a very large candle here, and let me just blow the chart up so you can see it a little bit better. You have a very large candle right here, and then you'll notice that we had 1, 2, 3 candles all close within the inside range of this candle. So when that happens, what we do is we move our stop up to the low of this candle, that they all closed within that range. So essentially, our stop loss gets moved up pretty much to break even at that point. And then we simply continue to follow it right on up. We have another inside, 3 inside candles close in this candle here. We have this candle, which is a larger candle. Then we had 1, 2, 3 inside candles. So what we would do then is move our stop loss up again to the low of this candle, and so on and so forth. We have another 1, 2, 3 inside candles. So what we would do is move our stop loss up to the low of this candle at that point. So you can see how we're continually protecting profits, and we had about 100 pip risk in this trade, but we've currently got about a 244, 245 pip profit on this. And there are a number of ways that you can use money management on this to really benefit you and to increase your profitability. For that, you can take a look at my free video series, Underground Strategies, the Underground Strategies series, and you'll see some of the techniques that we use for money management. But if you don't look at that, you can always just take a 1% risk, and then you're pretty much doing well at that point. But you always want to make sure you're trading this with the trend. And once you do that, you're going to see that this is a technique that can be very, very profitable. We can just go back through the charts and look at this technique. For instance, price goes below the negative 100 right here, but I want you to notice that the trend is down at this point, so we're not going to be taking that trade. Price goes above the negative 100 here, but you'll notice that the trend is up. The line is moving up on a gradual upward pattern. Here would be an instance where we would be able to take the trade when we have close below, and then we'd be looking for a buy above the next swing high level, and we finally get that buying opportunity about right here. We get a buying opportunity, and we just see this trade go right on up. We move our stop loss up, and basically we get out with a very small loss on this trade. But we can continue to go back in time, and we'll just continue to see this. You'll notice it doesn't happen very often, but when it does, it's obviously a very good opportunity. We can go back here to when the market was trending very nicely, and we can see sell signals in place. So here we had a sell signal, basically. Price caused the CCI to go above the 100 level. Once it did, we're looking for a breakout below the closest swing low or sub-swing low. In that case, it's this candle right here. Price broke out, and then you'll see here that we had a nice opportunity. Price dropped. It's just continuing to kind of bounce around here at this point. Our stop loss was way up here, so we have plenty protected at that point. And then you'll notice that we finally get the 3 candles to be able to move our stop loss. So our initial stop loss is up here. Then we have the 3 inside candles come into play right here. We have 1, 2, 3 candles inside. So what we do is we move our stop loss down to right there. And then let's see here. We have another 3 candles, 1, 2, 3 inside of this bar. So we go ahead and move our stop loss down again, and to that point it's almost to break. It's a little bit better than break even right there, so we've got a little bit of profit on the table. And then price does continue to fall, and we'll get an exit here shortly. Let's see here where the exit comes into play. Okay, we've got basically another 1, 2, 3 candles right here, so we go ahead and move our stop loss down one more time all the way down to this point, and we eventually end up getting stopped out at that point. And so you can see here from an entry point of way back up here at this line and a profit right down here, we had about a 260 pip profit, and we had about a 175 pip total risk on that trade. So once again, not a bad trade. Same thing right here. We have a entry point once again. As price is trending downwards, goes up above, then we get a sell signal right here below this low, right there. And then what we're doing is we're just trailing the stop with that 3-bar pattern once again. Once we find that 3-bar pattern, then we essentially are exiting out of that trade. And you'll notice that 3-bar pattern doesn't really come at all in this entire move here. We didn't really get a 3-bar pattern at all. And so actually we're still in this trade by the time we have the second trade. So if you really want to know what this trade was all about, if we just shrink the chart down here, you can see that our position that we got taken out on basically was way down here at the bottom. So let me move that. Let me move those two lines there. The initial position was way up here, and that was a 442 pip move with about a 200 pip risk. We also had another position right here to be able to do the same thing. So I've shown you, 4 trades here, and here's another one that did the same exact thing, and we got out with a very nice, very tidy profit on that trade as well. If you look here, we had a 3-bar. Well, the 3-bar close actually didn't come until we got it. So in reality, we were in this trade all the way through. We were in this trade actually all the way through from this point all the way down to where we actually got out of this trade. So we had 3 positions we could have taken on this trade. The first position, total of 1,224 pips. The second position, a total of 442 pips. And the third position, a total of 273 pips. So you can see how powerful this is in a trend. And in a non-trending market, in a sideways market, it's fine because we're really not going to be entering and exiting this trade unless it's really a trending market. So that's a quick tip for you to see where we are currently on the euro dollar and some of the techniques that you can use to really begin to profit from this market. This is a very simple technique that will work very, very well. So basically right now we would be long in the euro dollar on the 4-hour chart, and we would be waiting. Essentially we have a protective stop right here at this level. So it almost hit that stop today on the open, not quite. Potentially, with some other charting patterns, there's another opportunity to buy here. This looks like what I call a reversal candle setting up here. And depending upon what the fib levels are on this, we've got, draw a couple fibs on the chart just to show what we've got here. We've got this dropping down right into the 382 level from basically this low to this, so it's a 382. If we get a reversal candle here at that 382 level, that could be another buying opportunity with a very, very tight stop below where we currently are, below this 3-bar inside pattern, and essentially that would give us a buying opportunity to go buy above the break of this candle if indeed it does close as a reversal candle. And essentially you'd be following the same pattern, just that 3-bar pattern all the way up until you finally get that 3-bar pattern that knocks you out of the trade. So that's a very, very easy technique and setup for you to use, and I'll be showing you some more of these in the days ahead, and you'll be seeing some live signals as we go in the market every week. I'll be showing you some trades that you can potentially take. So be on the lookout for those videos, and we'll catch you in the next one.